So from Otet Markets, this is Ahura with the global economic outlook in the week ahead, which is going to be the third week of 2025. As always, let's first check what we had last week, and then we can see the week ahead and the expectations. Last week, generally, the data that we had, they were positive, mostly from the most developed and developing economies that we had, especially with the PMI numbers. As mentioned earlier in the last week of 2024, I mentioned that the data that we're going to have in the week ahead, in next weeks, they are mostly under effect of the holiday sales, which is usually happens in November and December of every year. So generally, the data that we had, they were positive because the people, they are going to buy more to get them to have a more risk. So the economic activities in both manufacturing and the service sector, especially in the service sector, usually is a positive in December, which is the normal, something normal to see. But out of these general data, the other data that they were more important to review, then they were first of all the Chinese inflation. Chinese inflation, after several months of falling, last month, finally in December, was about 0%, not changed. So just like kind of the natural inflation that we had. So that was somehow somehow could be the positive data for Chinese economy, as we can say, okay, now the situation is going to be a little bit better compared with the previous months. And there are some signs of growing inflation, which we hope to be happen. We hope to be seen in the next. Actually, the Chinese economists are hopeful to see them in the next months. Out of the China, out the general and the positive data, the data, the market mover data last week, it was the US labor market data. GLTs increased about 8 million on Tuesday numbers, and then on Wednesday we had initial jobless claims, manufacturing activities. Most data that we had, generally they were positive, and especially this initial jobless claim at 201K. And then on Friday, we had on NFP numbers with the unemployment rate falling to 4.1% with 250,000 newly created jobs. They were all above market expectations, which means that the U.S. economy and especially the labor market is still strong and can go forward and can handle the higher rates for longer. Also, we had last Friday, we had the minutes of Federal Reserve December meeting, and in that meeting, actually the minutes of that meeting, we understood that the most Fed members, they are supporting the holding the current rate till we have a more sign from the new administration what they are going to do and what would be the market reactions to the new policies in the White House, which is going to be start from January 20, exactly 9 days later. That's these data, and also these data generally shows that, so with the current condition, there are more cautions in the market. So the market can expect to hold the current rate for January and March meeting. So we are not going to see any rate cuts, most probably in next two meetings of Federal Reserve. These data means that. That's why we saw that after these data, we saw that the interest that yields for the bonds increased in most economies, especially in the United States, with the 10 years Treasury notes yields increasing to 4.76%. These data generally, as mentioned, change the market's expectations for the rate hike for 2025 somehow. Not changing. Actually, we had this expectation in December meeting of Federal Reserve, but it increased the possibility of happening this. Now the market even talking about maybe one rate cut totally in 2025. Week ahead, we're gonna have more important data to publish, especially from United States, United Kingdom, and China. The most important data gonna be published from them. From United Kingdom, we're gonna have inflation numbers on Wednesday, especially, and we are expecting to see that inflation slightly increasing, which is going to be mostly because of the headline inflation, because of the energy prices. We will talk about the oil and energy prices later. Sorry. And then on Thursday, we're going to have more data, especially from the GDP, industrial production, and manufacturing production. And then on Friday, we're going to have the retail sales numbers from UK economy. Generally, the data that we're expecting to see from the UK economy in the week ahead, we are expecting to see slightly slower than expected numbers. We can see, even if they are not slower than expected, they're going to be lower than the previous months. So generally, the data we are expected to see from the UK economy, they are a little bit weaker number, which means that the UK economy going to get more under pressure, and especially the pound against this cross, especially against US dollar. So the general data we're expecting from the UK economy, they are not a positive. In China, we're going to have very important data on Monday and Tuesday. On Monday, we're going to have the export, import, and labor market data. And we are expecting, no, labor market data going to be on Friday. We are expecting the import and export data on Monday. Generally, after several, the 2 months ago, the export increased to 12%, and then fell and then increased. Last month, it increased by 6.7%, and this month we're expecting to see the export, which going to be for December number actually. We are expecting to see the export increase by 7.3% in December, which is normal. Sorry. Which is normal to see because of holiday sales, that which I mentioned earlier as well. But the imports going to continue to be lower with 1.5% fall, expecting fall after 3.9% fall in previous month. Generally, it means that still the domestic demand in China is the problem, is the main concern actually. And we're gonna have the PBOC meeting in next week as well. I think it's gonna be on Thursday. We expect to see the central bank in China to hold the current rate for prime rate at 3.1% and the China loan prime rate, actually 1-year prime rate at 3.1% and 5-year rates at 3.6%. We are not expecting any changes at the moment. And already the Chinese government and the central bank, they had made some changes in December. So your market going to wait and see the reaction of those previous changes, and then the next decision in the next month. On Friday, we're gonna have the GDP from China, industrial production, manufacturing production, and labor market data. We expect to see the unemployment rate to stay unchanged at 5% and a little bit increase in the quarter for data, including the GDP and industrial production. Generally, the data we're expecting from the China, they are a little bit positive data, is and show that the Chinese economy most probably we were actually, the Chinese economy, the Chinese government and the central bank, they were expecting a 5% GDP growth. I was talking about that they are not gonna have reach this number, and most probably we're gonna see about 4.5%. But now with the data they are published and the quarter four data that we're expecting, we can say that which IMF also said that most probably 2024 Chinese GDP going to be about 4.7% with the data we're expecting to see for the fourth quarter, which are going to published on Friday. Generally, the data they are positive and they're going to support the Chinese stock markets and Chinese yuan. And in the United States, the main and the most important data is the inflation number, which is going to be published on Tuesday and Friday. Tuesday, we're going to have producer price index, which is expected to slightly increase by 0.3% in December, and for the headlines PPI and the core PPI by 0.2%. But the focus will be on the Wednesday's consumer price index, or CPI, and CPI expected to increase by 0.3%, to repeat the 0.3%, or even increase by 0.4% after 2 months by increasing 0.2% and 1 month 0.3% increase in inflation. We're going to expect to see another 0.3 or 0.4% for the headline, and the core CPI expected to increase to fall by 0.1% after 4 months of increasing, which means that the excluding the which means that the main inflation driver in the previous months was the energy prices. So if we exclude the energy and food, we can see that the inflation is falling by 0.1%. Generally, the data that you're going to publish, especially for the headline inflation, shows that inflation is still sticky, and we shouldn't forget about the concerns of inflation in the United States. But at the same time, we're going to have, from the United States, we're going to have the import-export data, we're going to have the industrial production and retail sales, especially the retail sales on Thursday, which is going to be increase, which is going to show the 0.5% monthly increase and 3.4% annual increase. Generally, the retail sales for December numbers is somehow, as usual, and also likely to see increase, as we are expected to see the New Year sales and the effects of these events. And on Friday, sorry, I'm a little bit sick. If it's uncomfortable, I'm so sorry for that. The voice and general my condition. And finally, on Friday, we're gonna have housing market data. We are expected to see that housing market to slightly increase after 1.8% fall in November. In December, we're expecting about between 1 and 2% increase, with 1,210,000 newly projects started, and construction started for the housing construction started projects for 1,210,000. Generally, the housing market, you're giving a little bit mixed data for one family, the single family houses or multiple family houses. They're a little bit, the condition is a little bit mixed there, but generally the housing market still is fine and still improving. This is what we're expecting to see in the data. But we shouldn't forget the next week also going to be the week of the earnings reports going to be kick off next week, especially starts from Tuesday and Wednesday. We're going to have banking reports, especially the JP Morgan, Wells Fargo, Citigroup, Bank of America, Taiwan Semiconductor, United Health Group, Morgan Stanley, and generally the mostly banking and banking sector going to start the earnings reports. We have to watch these numbers and they're affecting the market as well. If looking at the charts, let's check the chart and see how these data are going to affect the charts. Let's start with the US dollar index. The dollar index expected to hold the current after last week increase. We are expected to see the US dollar index to hold the current levels, but most probably we can see some correction around 108.50 and 107.70, around these areas. We're going to have some correction, but generally the US dollar still is bullish. These actually, after the last, let's say before talking about the gold, let's say the stock market last week, after the data that we had, the data coming from the minutes of the Federal Reserve December meeting that we had some pressure on the stock market, which is expected to continue in the week ahead as well. With these expectations, even though the US dollars got stronger, the gold didn't lose the momentum and continued its general slow uptrend, which is expected to continue in the week ahead as well. So generally, we're about the gold, we are still positive. We are expected to see the higher rates, but more pressure on the stock markets on S&P 500, NASDAQ, and Dow Jones as well. As for oil and energy market, as mentioned, this we're gonna have we are actually having a colder winter after what happened in the United States. We have the lower generally the numbers that we had. We have the sorry. We have the lower inventories in United States. The inventories, the energy inventories in United States is in lower level in the past 10 years. So generally, the data that we have from United States about the energy, they are not supporting so much the environment. So the concerns are increasing. So which means the energy price, which is the policy for the energy price, and we can see the energy price increasing slightly higher. At the same time, we have the colder winter and a higher price for the gas, and all of them are supporting the energy price. So we expect to see the oil price could be able to hold its gains around and above 75 US dollar. So we talked about the gold, oil, US dollar in the stock market. About the cryptocurrencies, after touching its all-time high and falling around about under 92,000 US dollar, we saw in the last weeks that Bitcoin several times tried to increase, but rejected usually around 100,000 US dollar, which happened a few days ago again. Generally, with the data that we have in the market reactions right now, the corrections that we had in the last days, we expect to see this correction to continue in the week ahead, especially if the price breach under 94,000 US dollar. The next stops could be around 92,000 and then about 86,000. Generally, we are negative about the Bitcoin price in the week ahead with what happened fundamentally and technically in the market. This what's happened in the market in the last week and our expectations for the week ahead. Hope it was useful for you. If you had any other question, please don't hesitate to write in the comment sections. I will try to reply them as soon as I can. Have a good time. Bye-bye.